The thought of buying your first home may feel exciting, but also intimidating, as this is probably the biggest financial purchase you will ever make in your life. Today, I want to break down the 10 essential steps of buying a home. These come directly from my personal experience helping hundreds of home buyers like yourself through their home buying purchase. Grab a notebook, cup of coffee, energy drink if you will. I've got a little bit of a longer video for you today, but I promise it's going to be worth it because today I'm going to answer all of the questions you have about the home buying process. So let's get into it. The first step to buying a home is to plan your finances. I like to divide this up into 3 separate categories that are going to be essential to setting you up for success: savings, income, and your credit score. When I talk about the savings needed to buy a house, I'm talking about money that you are going to save up that will specifically go towards covering your down payment, as well as your closing costs or fees, if you will, associated with getting the loan and buying your house. There are tons of different loan options out there that range from 0 down payment all the way up to 20+%. Now, depending on your financial situation and how much money you're going to put down, that obviously is going to factor into how much money you need to save as well. I would say, as a benchmark, don't plan on using a down payment assistance program right off the bat. Because keep in mind, the more money you have saved for your purchase, the better off you're going to be financially. It's just going to be a lot less of a headache. So I would go ahead and say, let's plan for kind of the typical minimum down that you would need, which would be a 3.5 down for an FHA loan. FHA loans are great for first-time home buyers. Now, that 3.5% down payment does not also factor in your closing costs. So closing costs, like I mentioned, are those fees associated with getting a loan and buying a house. This is going to cover things like your title work, any of those loan fees, things like prepaids for maybe mortgage insurance or your home insurance. All sorts of things go into that. So I would go ahead and also budget an additional 3% for your closing costs. So let's just say, as a benchmark, what you would want to do is save up about 6.5% to 7% total of your purchase price or the home amount to cover the down payment and closing costs. Because keep in mind, closing costs are going to be by default your responsibility as a buyer. It's not always the case that those can be negotiated and paid for by the seller. Also, you are most likely going to have a down payment. I'd say it's just better to go ahead and plan for one. There are tons of other videos on my channel that cover down payment assistance programs. We cover how to negotiate closing costs. So if you don't have these or saving up that money is going to be hard, don't automatically get discouraged, but I'm just kind of sharing the best practices. Now, in terms of income, that's super important when buying a house. You are going to want to be able to show that you have been gainfully employed over the last 2 years. Now, I want to elaborate on this a little bit. This doesn't mean that you have been at your same job for the past 2 years necessarily, but they just want to see that you have had a good work history for at least 2 years, like steady income coming in. So this means, steady hours if you're hourly. It can also mean like no large gaps in employment. If you haven't been working for a full 2 years, that's totally fine as well. Things like schooling or some type of trade program where you need to go through like maybe an apprenticeship before you can actually start your job can all be counted towards that work requirement. Now, in terms of credit score, a great benchmark is to aim for a 620 or higher. That's likely going to be considered a good credit score in lenders' eyes. Now, there are some loan options that are going to start at a lower credit score than that, but just keep in mind that if your score is lower, and this goes for any spouses or co-borrowers as well on your loan, that the lender may charge extra fees or a higher interest rate, or even require a higher down payment to give you that loan. So for any of you who are trying to set yourself up for ultimate success, I would say try to aim for like a 740 as your median credit score. That's only going to help you out. It's going to offer you many more loan options as well as much more competitive interest rates. So if you've listened to everything that I've said so far and you feel like you are in a pretty good spot to start the home buying process financially, you're going to move on to step 2, which is hiring a realtor. Now, it is so important to hire an agent to represent your best interests as a buyer. Keep in mind that sellers are going to have their own agent to represent them. They are not going to represent your best interests. They are really just representing the seller. So if you were to work with them exclusively or call them and try to buy a house, just know that it's their job to kind of negotiate against you. So to protect yourself and not have someone who is like a trained negotiator working against you, it makes the most sense to hire a buyer's agent to represent you and your purchase alone. So that is oftentimes the role that I will take. And I will work directly with my clients to negotiate against all those other people and try to get you the best deal possible. Now, usually hiring a buyer's agent does come at no cost to you because in most cases, sellers, when they sign a listing agreement, they will agree to pay their agent a commission. And then usually those agents share their commission with the agent that brings the buyer to the home. Now, this isn't always the case necessarily. Like there could be a time when maybe you want to see a for sale by owner property and that owner is not willing to pay any type of realtor commission. Maybe the owner of a home, even if it is listed with an agent, maybe they're not offering a ton of commission and it would be difficult for an agent to split it. Just know that there are some cases where you could, as a buyer, be held liable for your agent's commission. So just have that conversation with your agent up front. For me personally, how I handle that is I always tell my clients that I can see the commission that I would receive on the front end before we even look at a home, and I will let you know if, I would need you to cover my commission. And that has only ever come up in my personal experience when we were looking at for sale by owner homes. I'll either reach out to the owner and they'll say, yes, we'll pay you a commission if you bring us an acceptable offer, or no, we won't, and here's why. So don't be alarmed to have those conversations up front with the agent that you do decide to hire. And I will also let you know that a lot of times agents are going to want you to sign a buyer agency agreement. This is something that I have my clients sign up front. And this basically says that you as a buyer are hiring me to be your agent to represent you. And this is my commission that I expect to get. And it kind of in detail legally outlines our whole relationship as a realtor and a client and how that process is going to work. It's also going to allow me to either represent both parties or just one party, and all of that is lined out. I like to do this up front because I want you to know that we're going into this together and I'm not just going to abandon you and you're not going to abandon me and I'm not going to work for somebody else behind your back. I do this on the front end, so don't be afraid of other agents do that as well. When you are trying to find a great agent to help you out, you're going to want to try to find someone who is very familiar with the neighborhoods and the cities that you are looking at, as well as someone who is used to working with first-time home buyers. There are a lot of first-time home buyer loan programs out there. There may be certain grants, and just sometimes the process comes with certain nuances. You may need a little bit more explanation on some certain things than experienced home buyers and sellers would. So it's important to work with someone who knows how to handle that. If on step 2, you're already kind of feeling like this is a lot of information, don't stress about it. I have already done this part for you. So if you are ready to get connected with a realtor, start the home buying process, you will find a link in the description of this video. And if you take the minute to tell me a little bit about your buying timeline, where you're looking to buy, I will make sure that you get set up with someone who is just as great as me with explaining things, who can help you walk through the home buying process. Once you have hired a realtor, the next step is to get pre-approved for a loan. Now, as we've talked about, there are so many different loan types out there. And I think a big misconception is that certain lenders only offer certain loan types. And that actually couldn't be farther from the truth. Most lenders are going to offer the wide range of, very regular common loans. So most lenders that you go to are going to offer a conventional VA, FHA, and nowadays a lot are offering the USDA loan as well. So it's not like you have to apply for a loan over here that's conventional, apply for the USDA over here. A lot of times these lenders can quote you and offer you all of these options, which is great. So there are many places that you can go to get a loan. The first thing that I would recommend that you do, since you've already been connected with and hired a great realtor, is ask your realtor, do you have any lenders that are great that you've worked with, who's, your clients have been happy with, that, you suggest I call and reach out to? Realtors cannot receive a kickback for giving you a recommendation for a lender. That is completely illegal. So this is a great way to kind of pick your realtor's brain a little bit and see who they honestly have really enjoyed working with, and get those connections up front. A lot of times these are going to be local lenders who you can talk to easily on the phone. Maybe you can even visit their office, and that just does oftentimes help a transaction go very smoothly. In addition to this, you can always ask for recommendations from other friends or family members. You can go to a mortgage broker who has the ability to kind of take your application and then try different loans with different lenders and kind of give you a good picture of what different options are available to you with your income and credit score. You can go to like your local bank or a local credit union. They also have some great loans. And then there's also a ton of like big online lenders as well. You know them, the Quicken Loans, the Rocket Mortgage, services like Own Up. There's tons of them out there to choose from. Now, it is very important to shop around for a loan. When you are applying for a home loan, regardless of whether it's with a local bank or someone online, usually you are going to fill out some type of online application form, whether that's sent to you or already posted somewhere. And lenders are going to want to look at a few things with that. They're going to want to see a month of pay stubs, 2 years of tax returns, 2 years of W-2s or 1099s, your 2 most recent months of bank statements as well. Part of getting pre-approved is going to be a hard credit check. It is essential for lenders to do a hard credit pull because they need to know accurately what your credit score is. That's going to be the only way that they can quote you an accurate interest rate. Understand that this hard inquiry is only going to drop your credit score maybe up to 5 points. Like, it's not going to tank your credit score by any means. And with this, you are going to have a 45-day period to shop around, meaning let other lenders pull your credit as well, fill out your applications with them, submit your documents to them, and compare the loans that they're able to offer you. Compare the rates, compare the fees. And you can do all of that during a 45-day period, and all of that will be grouped together as just one hit, one hard inquiry. So it's a great way to shop around. Just like we're having Black Friday right now, you wouldn't just go online and pay full price for something. You want to kind of compare your options because you could be locked into this for the next 30 years. So it makes sense to spend a little time and compare the interest rates and fees. Once you've gotten pre-approved, it is time to move on to step 4, which is to start house hunting. This is the most fun part for most people. My huge pro tip here is to, before you even start looking at houses online, make a needs versus a wants list. Think about your family situation. Think about how many cars you have. Think about if your family might be growing while you live in this house, and think about all of those needs versus the wants, and make a list kind of depicting both. Not only is this going to help you when you start looking at homes in person, but it's also going to be a great thing to pass on to your realtor, because then as a realtor, I can see exactly what you want in your home, and I can make sure to guide us towards homes that are going to be the best match for you. It's so easy to all of a sudden you get that pre-approval letter and then bam, every house is open to you. Like the world is your oyster, and you just instantly get overwhelmed during the process. So that needs versus wants list is going to be so critical, and it's going to be something that you're going to rely on and go back to help you make the right decision. I'll go ahead and let you know that if you and your realtor are on the same page, meaning that you've done a consultation up front, you signed your buyer agency agreement, you went through the loan process, you got pre-approved, and you've made your needs versus wants list, you probably won't need to look at many homes in order to find the perfect fit. I would say that if you just feel the need to go look at 20 homes, like, you needed to do that before you even started this process. Like, go to your open houses on your own time and get that out of your system, because needing to look at 20 homes isn't going to help you when you are in the buying mindset. Like, this is purely like not entertainment. It's not house hunters. It's not selling sunset. At this point, it is making the biggest financial decision of your life, or at least the next few years. So you need to be very strategic with that. And you don't need to distract yourself by looking at homes that aren't going to be the perfect fit just because, like, they're really cute. So that's just something to keep in mind. Now, after looking at a few homes, you'll likely find one that is good enough to make an offer on. That's step number 5. It's very important not to wait too long to make a decision. on a home, whether you want to make an offer or not. There are going to be multiple buyers, most likely looking at the same home that you are, even if it's a slower time of year. So just keep in mind that even going home in the evening and saying, oh, we'll take a night to think about it and we'll reconvene in the morning, could make you lose out on a home. So understand that time is of the essence when you're looking at a home and deciding to make an offer. Now, when you have found the perfect house and you decide to make an offer, understand that there are so many different terms that can go into that. And if you feel like it would be beneficial for me to make a video kind of breaking down how to write an offer, like what terms go in that, let me know in the comments and I'll definitely do it. But for the means and purposes of this video, you'll rely on your realtor to help you understand those terms and write up the offer. When that is submitted to the seller, typically in my market of Arkansas, the sellers will have about 24 hours to make a decision. I know that time frame can differ depending on where you are, but the sellers will have 3 options on how they respond to your offer. First, they can accept it, which is they accept your terms exactly how you've written them. That's obviously the best case scenario. The second thing that they can do is they can just flat out reject it. They don't have to give any reason. It's just rejected. They don't like it. If you get a rejection, it does not mean that you can't submit a new offer. Just understand that. And then the third option that they have is they can counter your terms, which is basically saying, yes, we like your price that you offered. Yes, we like, the closing costs, but we, want a different closing date or something. So they can counter your terms. And then if you do get a counter, you have the ability to agree to that. And then you're under contract. And if you reject it, you can either move on to a new property or you can submit a whole new offer to them. If you are able to come to terms with the seller, meaning that they either accept your offer right off the bat, or maybe you have to negotiate some of those items on a counter, then you can move on to step 6, which is your due diligence period. During your due diligence period, you are not only going to have the opportunity to perform any inspections that you see fit on the house, but also will go ahead and get your home insurance as well. Now, a general home inspection is going to be probably one of your only out-of-pocket costs during your home buying experience. Typically, this is around $400 to $450, and it's due on the day of your inspection. Inspector is going to go through the entire house, in the crawl space, in the attic, on the roof, and really just check it out and give you what I like to consider a report card on the overall health of your property. Now, keep in mind that you are hiring this inspector to find issues or items of note with the home. So people always say, did the house pass inspection? There's really no pass or fail. Because, I've bought homes as is where there is an inspection that is lengthy, but it did not pass the inspection. It's really just like a report card. Here are some things that are in great condition. Here's some things that might need some updating and some work. So in addition to having the home inspection done, understanding that these home inspectors are more of trained generalists. They understand, what is code in your area. They can look at things, but they're not licensed professionals. So they're not HVAC techs. They're not roofers. So you may choose, depending on the findings of your home inspection, to have some of those professionals come out as well and give you a second opinion during this due diligence period. Now, in my market, this period is 10 business days, so 2 full weeks. And in addition to that home inspection, you may choose to get other inspections done. This is the time to do anything like a mold test, an air quality test, maybe a lead or radon test. Anything that you see fit can be done during this time. Additionally, this is when you are going to want to get home insurance quotes. It is going to be very important to get home insurance, protect your investment, but then also your lender is going to want to make sure that you have that as well. So collecting quotes during this time is a great thing to do. Make sure that you can get pretty affordable home insurance on your property. And some properties may be subject to additional types of insurance. So think flood, fire, hurricane, earthquake insurance, depending on where your home is located. At the end of your due diligence period, you will need to review your inspection report and see how you want to move forward. This would mean that you're moving into step 7, which is potentially negotiating repairs. Now, unless you bought an as-is home where you wrote in your contract, like I'm taking this in its current condition as is, you have the ability as a buyer to negotiate repairs with the seller. How I like to handle this with my clients is letting them know up front that any items that are not operating in working order, like how they're supposed to run, are warranted things to ask for in this negotiation of home repairs. You'll even likely have this if you decide to purchase a new construction home. They may also call this a punch list if you go that route. Once they receive this list, they'll likely take a few days to review it. In my market, they have 5 business days. So like a full week to review your requests, and they will probably go ahead and get some quotes of their own to see how much these repairs might cost them. At that point, they have 3 options. It's similar to negotiating your original offer. They can accept your requests and say, yes, we will go ahead and address all these repairs. They can reject your repair list and say, nope, sorry, we're not doing any repairs. That's pretty unlikely if you didn't already negotiate an as-is contract. Most sellers are going to be reasonable about reasonable things, so don't stress about that too much. The third option is that they can counter your repair list. So they'll say, yes, we'll take care of A, B, and C, but not D. And then you guys would go through a negotiation period back and forth and see if you can come to terms on those repairs so that both sides feel comfortable and are excited about moving forward. Once those repairs have been agreed upon, you will move on to the next step. Step 8 is the appraisal. Now, the appraisal is going to be ordered by the bank, and it is honestly only there to protect the bank. It is not necessarily going to be a good determination of the actual market value of your property, but what the bank does is they send out an appraiser to give them a value of what the appraiser's opinion of the value of the home is. And this is purely to protect the bank and the bank's financing that they are giving you. They are not going to give you more money for the home than they deem through the appraiser that the home is worth. So just know that this appraisal can come back in 3 different ways. 1, the house can appraise at your sales price, meaning if you are under contract for $300,000, the appraisal comes back at $300,000. Option 2, the appraisal can come back with a value higher than what you are under contract for. That's great. That means that you could potentially have a little bit of built-in equity in your home. And depending on if that value is higher, you may be able to work with your lender to negotiate some extra closing costs or things like that. The third option is that the appraisal could come back below the value that you were under contract on the house for. If that is the case, you may need to do a little bit of renegotiating on your contract. Usually, like I said, reasonable sellers are going to probably come down on their value and come to the appraised value so that the transaction can keep moving forward. No one is usually trying to work so hard against the other party in these real estate transactions. So if everything is going smoothly and let's say that the house appraised for like $5,000 less than you're under contract for, you may be able to negotiate a little bit of a better deal because it didn't appraise. One extra note that I want you to keep in mind regarding appraisals is that sometimes, depending on the condition of the property and also depending on your loan type, appraisers may have specific notes and repairs of their own that need to be taken care of prior to your closing. I see this most commonly with VA and FHA loans because those are typically a little bit stricter when it comes to the health and safety standards that the appraisers are looking for. So one thing that you can typically always say is like, for those types of loans, like a USDA, an FHA, a VA, understand that like this house has to be like in good livable condition. It's like not really a fixer upper. So like the home has to have the basic appliances. Like I'm not talking about refrigerator, but like it has to have a range for cooking. It can't have like, open drywall. It needs to have floor coverings, for example. Like it can't have like pulled back carpet. Another thing is like handrails are a big thing. Like if you have stairs, there needs to be a handrail there. So if you are under contract, let's say you're using an FHA loan and your appraisal comes back and let's say the value is fine, but the appraiser notes some items that need to be added, they will write that in there and you will likely get a copy of that. Your agent will get a copy of that and you'll need to send that over to the seller's side and they will need to make those repairs that were requested in the appraisal prior to your closing. And that's going to be important because the appraiser will need to come back out to the property and check that those things have been done to give the bank like an all clear to give you the loan. So just keep that in mind as well. There could be additional repair items that are necessary for the appraisal. Doesn't always happen, but I'd say if you're trying to push the limits with the property condition, you may see that. And I know that's a little tricky. So if you have like specific questions, let me know in the comments below and I'll happily tell you kind of what my experiences have been with those appraisal repairs. If you have made it through all of these steps, you have had your home inspections, you've negotiated repairs, you've ordered the appraisal and the appraisal has, come in fine, the value's fine, no repairs. The next step is step 9, which is going to be your final walkthrough. This is going to be your opportunity before closing, usually done maybe the day before closing or even a few days prior, to where you go back to the house and you check up and see like, is the house still good? Is it still in the same condition as I'm expecting? Hopefully it didn't have any negative adverse changes since the time you went under contract. Additionally, this is your opportunity to make sure that those repairs that were negotiated have been completed. Now, this can be done a few different ways. You can either check yourself. You can request receipts of the work that was done from the sellers. I would say typically if you're going to ask for the receipts, make sure that your realtor goes ahead and when you are writing up your list of repairs, have them put in there that you want the receipts. That's going to be exceptionally helpful because sometimes it's just a mess to try and track down receipts after the fact. Another option is to go ahead and hire your home inspector to come back another time, usually for a discounted rate, and just check those items to make sure that they have been addressed for you. So this is your one last time to kind of make sure everything is still good, you're still excited about it before you go to the closing table. Right around this same time of your final walkthrough, you should be getting your clear to close from your lender, meaning that they have everything ready to go, loan is approved, and they will be sending you your closing disclosure or your CD 3 business days prior to your closing date. And this CD has all of your final loan numbers on it. So this is going to have your interest rate, it's going to have your loan amount, your cash to close, meaning like the amount of money that you need to bring with you to closing. And that will take us to step 10, which is actually closing on your house. At this time, take a careful look over your closing disclosure. Make sure that all of the figures look correct. Nothing should be unexpected really at this point. And take a look at your cash to close figure. That's going to be the amount that you are responsible for bringing to closing that covers your down payment and your closing costs. Now, there's usually 2 ways to tender this. Don't show up to closing with a big briefcase of cash. That would be a nightmare. They will not let you buy the house, but rather you will likely either have a wiring instruction to send money to the title company or attorney's office, wherever you're closing, or you will need to bring a cashier's check, not like a personal check or anything, but a cashier's check for that amount made out to who is doing your closing, being, the attorney's office or title company. On your closing day, you will bring your cash to close if you're bringing a cashier's check or have that pre-wired ahead of time. And you will definitely need yourself, any co-borrowers, spouses that are going to be on the loan will need to attend as well. And you will need to bring a copy of your photo ID. Don't forget that. Typically, I'd say a closing for a buyer who's getting a home loan would be about 30 minutes. And this is a great time to ask additional questions to your closer, but then also your lender or your agent who will likely be present as well. And that's it. Complete all of these steps and you will have officially bought your first home. Since I'm just going to go ahead and pretend that you're one of my clients at this point, I'd go ahead and plan for a good 3 to 6 months to get through all of these steps. That way you are not putting yourself under like very stressful time constraints. Things can always be moved up, moved back if needed, but giving yourself ample time is only going to help. Same thing with having that extra savings. Now, if you've taken all of this information and you're ready to get going on the next step to learn even more about how much house you can afford and dive into how lenders are going to look at your finances and your financial picture to determine really your loan amount, make sure to check out this video I made explaining debt to income ratio. I walk you through an example of what to look at in terms of your income, your debts, and how that is calculated so that you guys can determine what your likelihood is of getting loan approval up front. Thanks so much for watching. I'm Nicole and I will see you in the next one.